Okay guys, so I just wanted to kind of make a quick video just going over the free slideshow. It'll be in the description of this video for anyone interested. You can download it, study it, do whatever you need to do with it. But I think that there's a lot of difficulty understanding like really how I trade, because one thing I'm noticing since I started the community is a lot of people are looking for like a call out that they can jump in and then ride for like 300% and dip. Which, I mean, you could maybe do that, but it's not realistic if you're trying to be doing this in like a career sense, right? Because you need to have good risk management and you need to know exactly when to get in and exactly when to get out. It can't be like okay, well, I just got this alert, so I'm going to buy here and then I'm going to ride until whenever, right? Like, it's not sustainable. You can make a quick buck like that, but in my experience, you will inevitably give it back. So let's just hop on here and go over some of the trades. So you can see how I kind of have this marked out. So BCG, this was from a while ago. It would appear to me that it popped up early, I'm guessing off news, and it had a big rejection. Okay, so we dipped below the VWAP, which is the yellow line, orange line, whatever. Then we have the 9 EMA, the gray line, and the 20. These are all very important in my strategy. So one of my favorite setups is this setup here, the VWAP breakout. What that means is this VWAP line, this yellow-orange line, that is called the volume weighted average price. This is a serious level of support and resistance. It is the exact medium of what the stock is trading at. And oftentimes when it approaches it on a descent, it'll bounce off of it, and inversely when it comes up, it'll reject off of it. But in the instances that it doesn't, this is what happens. We push through, so we're tapping around here for a little bit, and then it flushed, and we went below it. You can see we kind of trend sideways with it. Volume's kind of shit. The second that we start getting bigger volume, the MACD starts opening. That's when the signal line passes over the moving average convergence divergence line. We get a big pop up, right? So we get increasing volume, which is what you want to see, and we push right through. So the second that we came back up here, I had punched an order. So I punched an order. The second we got close, we burst through, and I rode it up for a little bit, cutting it somewhere around there. So that's just an example of the VWAP breakout. I have a ton of them in here. We can go over them real quick. False breakout, this is basically like, this is the strategy that I would trade. This is like something that I'd want to see. Is basically we have a slight pullback. I call it EMA hunting, where we start trending sideways, looking for one of these levels, the 9, the VWAP, the 20. And when we find it, buyers come in, boom, volume. So like, this definitely faked me out. I definitely lost money on this. So we trend sideways, we hit the 9, boom, we make a new high. I'm totally in. There's no shot that I didn't buy that. We go up a little bit, and then bang, jackknife. We got this big volume candle here that negates that one. So a false breakout. Early bird special, I think I've gone over this a few times. This is about this, and you can see clearly it wasn't received too well once people got a hold of it. But when it gets dropped and you're in early, like I bought somewhere right here for the break, you can get a huge squeeze. That looks, don't worry about that. Okay. The VWAP breakout again. I'm telling you, this is maybe my favorite thing to trade besides the micro pullback. We come up, we reject, we trend sideways, we get choppy. We kind of try here, doesn't work out, try here, blah, blah. Move, boom, big volume. The second I see this volume increasing, we see this volume come in. This is an entry every day a week. And I'm sure this pulled back to this level here and went right back up. So another one that I made money on. Another one here, you can see choppy. We get above it, boom, big move. Couple more here. This is actually the 15-second chart to go with it. You can see we rejected off of it, and we start pushing up in what would appear to be a sort of ascending support line. right? So this is where your apex point would be. For you traders watching this, take notes, okay? If you're in my community and you're not taking notes, what are you doing, okay? Because this is what I preach to you guys on a daily basis. So the VWAP, ascending resistance, bang, apex point. Where are we going? We're going up. This was a small VWAP pop, so this is something that I don't recommend you guys do. So maybe I shouldn't even go over this. This is for more experienced traders that know how to read level 2. It's called a dip trade. So we were bouncing around here, and I basically bought here, expecting with a hard stop the break of the VWAP, expecting for a little pop. It was a quick couple second trade, 400. Micro pullback. Here we go. This is basically the only thing I trade besides the dips and the VWAPs. All right, sorry about that. So the micro pullback is when we get a big push. Put the blue light blockers on because they look cool. So we get a big push. This is a 1 minute chart on TRNR, one that pops quite often. MACD is open. Boom. Criteria number 1 on the indicators. Volume is ascending. Criteria number 2. Let's see. Our indicator lines here, the VWAP, the 9, the 20, the 200, they are doing what we call diverging. So when something diverges, it spreads apart. When something converges, it comes closer together. What do we want to see as momentum day traders? Correct. We want to see divergence. We call it bullish divergence. That means it's moving rapidly because the EMAs aren't keeping up with it. Okay, you see what I'm saying? For the future candle, that's why they have a little bit of value if they're used properly. Okay, so if it's diverging, that means the stock's going boom, 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 boom. It's moving up. If it was converging, that means the stock's moving slow and choppy. Okay, because the EMAs are tight. Because the last 20 candles are the same as the last 9 candles. They're doing nothing. But in this instance, as you can see, they start spider webbing out. Criteria number 3. What do we get? Where do I buy, right? Where do I buy? Do I buy here? No, because look what's waiting for me. So where do I buy? Do I buy as soon as we get above the VWAP? Nah, because the volume's not there, right? If this volume was here, that's a VWAP breakout. Then I can see it working. But we get a good push here. The volume starts increasing. I don't love that volume candle is that big, that red one. But, you know, MACD's open. We got the divergence. So I bought the second we broke that candle. That is my strategy, right? If you watch my other video, you buy when we break the pullback. So I rode this move right here. Okay? Simple as that. Let's move on. Micro pullbacks set up. Let's keep looking at them. See, this can get drilled into your heads. Where do we buy? Where do we buy? Booyah. Break of the pullback. Now, my guess is, I don't have the whole chart here. I probably bought, rode, sold, because I buy large shares. So here's what you guys are doing, right? You guys are basically buying with medium to average share size and holding for a long time. Not me. I'm buying large share size. Now, I'll explain, because this isn't always, in this instance, 10,000 shares at that price, at the break, ride it up to here, sell within, a minute and a half, if that, and I'm up thousands of dollars. Okay, that's how that works. I'm in and I'm out. You guys are literally like buy, hold, and then every now and then you guys have like a big home run winner and your portfolio's up. But then what happens that time you buy and you hold and it does this, right? And you're still in it because you didn't use risk management and you just couldn't be bothered to help yourself. So you're in it and boom, and then you're like, it'll come back, and then it does this. Boom. And then everything that you just made on that home run trade that you rode all the way to the top for 8 hours is gone, right? It's not how I trade, and that's why I'm successful. Micro pullback. So in an instance like this, how do I trade nowadays? When you guys see the live trade archive, it all makes sense. I had told myself, okay, we have a MACD that's flirting with being open. We made a big move early, kind of sold off, but it came back up, okay? This is important. If it had sold off, dropped, especially below the 200, we don't want to see that. But if it had sold off, dropped, and just, never recovered and just stayed kind of down here all day, we never would have traded it. But it's our recovery, right? Now, I can't see the volume candles, unfortunately. But I told myself, okay, we break this level. You can see my arrow. We pull back, test the VWAP, we come up. This is bound to go up. Okay, everything's screaming in my face that it's going to do that. So how would I approach this nowadays? I would buy as soon as we broke, which I did. And as we came to here and pushed up, I'm adding. So I'm going from like 2,000 shares, add 2,000, add 1,000, add 2,000, cut the position, right? With my stop being break even on the way up. Micro pullback strategy. Look at this. It's so glorious. You can see we come down. Where do I buy? Right there. The second we break that pullback. Okay, this is just rinse and repeat. Very simple. The second we broke that level, boom. I'm going from what was this at? 340 all the way up to about 370 in 2 minutes. 30 cents a share. Do the math, okay? This is how you make money. You don't buy and then hold for 6 hours. Doesn't work. You're going to get lucky a few times doing that, and then you're going to get burned bad. Trust me. Another example. Another perfect example of where I'm buying. High of day breakout. This is one we can go over. So high of day breakout is essentially what I call new data highs. So this is a 1 minute chart. We were pushing up. You can see we kind of pull back below the EMAs, but not really. It was just a dip, got a little exhausted. And we pull back up here, and you can see we kind of reject off this line. So what did I do? I put a horizontal line in the chart, and I said, okay, if we enter new data highs, I'll ride a quick pop up. What did I do? Exactly that. New data highs. I marked it. We came back up. I bought the second we broke. I rode. I sold. I didn't overstay my welcome. That's how you do proper technical analysis. This is a micro pullback on the 1 minute chart. This is sort of, this is a little harder for a beginner to spot, but, because it's not like a red drawdown like this, like the picture perfect one, where then it makes a new high and then goes up. This is more of like actually bullish volume that's coming in still, but like this little exhaustion here on this kind of volume where it is for the most part ascending volume, that's a micro pullback technically. And if you see that and you're able to catch it and your MACD's open, your volume profile is good, you're above the VWAP, you're above the EMAs, they're diverging for the most part, there you go, right? I was in Florida, and I remember being so shocked at how bad this thing reversed. I've still not seen this since this day. I mean, big moves up. Now, granted, this is kind of a weirdly priced one. This is going from, I think, let me get out of this pen. So we're going from $5 more or less all the way up to $8 in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 minutes. In about 11 minutes, we'll call it 10 minutes, we went from $5 to $8, almost $8.50, and that's a huge move. That's just an absolutely huge move. And the volume looks great. right? There's no big red candles shadowing or towering over our bullish volume. And then out of nowhere, now I didn't trade this, but I remember I was watching it looking for an entry at the break of the new data highs like we just talked about, right? Like if we come up here, boom, I'm in. And I remember watching this, fail to do it right here and thinking, that's kind of weird. Maybe we're just going to trend a little more sideways here and then, later in the day pop. And this was just vicious. This was a full give back of the move. Like almost a mirror give back. Like if you put a mirror right here, real bad, just terrible. So we call that a double top rejection, just to hit on the title. So we top here, we top here. That technically is enough to be like, okay, I'm not touching it. But the only reason I gave it a chance was the volume. All right. Again, download this, okay? It's in the description. It's free. It's for your disposal. Like, you guys can learn so much from this, and I'm going to have a couple more coming your way as well from more modern days. This is kind of a couple months ago. Early bird special. We went over that. Nothing too crazy. Flat top breakout pattern. Here we go, baby. Now we're getting real technical. Flat top breakout. So we have a big sell-off. We dip below here. We try to get above here. We fail. Back up. We try to get above it again. We fail. So that catches my eye because, first of all, we failed at this level again early in the day. And when we broke it, we came up pretty good. Now, granted, that's not great to see. But this right here would have been enough for you to make a decent bit of money on. So once I had seen this fail here twice, boom, boom, and I drew this and saw it did it there too, that becomes immediately valid. That line is absolutely valid. So the second we came up and broke it, even though we receded a little bit, you see I made $320 on this move. I sized in, I rode, I didn't stay for long, right? Like I'm not looking for this thing to break this and then go all the way up here for no reason. It's not realistic. I knew, okay, if we do break it, we're probably going to get a pop in buying volume. That's all I needed to make $320. I didn't need to hold this thing for the end of time because you know what else? I'm willing to bet you this thing just broke through here and just went boom. Because it doesn't look good outside of the flat top being there. One of my absolute favorites. Look at me. One of my absolute favorites, guys. The descending resistance breakout. This always works for me. This has my highest success rate outside of the micro pullback. The micro pullback 1, this at 2, the VWAP breakout at 3. When you see something reject 3 times on a descending line, now you draw this yourself, right? You got to be able to spot this without the line. But I had seen what was going on here. I saw boom, fail, boom, fail, boom, fail. And we were kind of squeezing to the 9 EMA hunting. I drew this and I said, we get over that and break it. I'm riding the wave. What happened? Boom. Got right over it, broke it. This is basically a new move, right? Like all of this, you can scratch at that point because this is the new move. Micro pullback. This is on the 1 minute chart. It's usually the 1 minute chart or the 15-second. This is the pullback. We pop up. We pull back, we break high, boom, I'm in. We go from, this was an intense move actually, $3.80 to $6. Huge. That's huge. TR&R, a losing trade, a very small one. I'm guessing this was when I was doing a small account challenge. Let's see. I think I actually documented this because I did break some rules. I was actually disappointed in myself. These topping tails. Do you guys see this? Do you see what I'm saying? When a candle is doing this, like that, and it just keeps doing it, like that's indecision. Also, volume looks like junk. Look at the size of the red volume. MACD went negative somewhere in that window. So probably as soon as we broke the VWAP by the looks of it. So much didn't look good and I still took it. And I can't tell you why. It was probably an emotional trade for no reason. Terrible topping tails. Look at this. One after another. We broke the VWAP. The volume looks terrible. The MACD is closing. all the types of shit you don't want to see. Failed micro pullback. You can see I even drew a line. So I was waiting to see this thing. We push above the VWAP on the 1 minute chart. We pull back. I'm looking to see this thing curl. When it breaks, I enter and we do this. Doesn't happen. Now, I don't think I lost money on this, but I definitely journaled it for you guys to see. And the volume doesn't look terrible. The MACD is open. So as you can see, like, nothing's 100%, right? That's why you use risk management. So let's go find another micro pullback, and I'll go over risk management. So this is beautiful. This is the most beautiful price action that you could ask for. Look how many micro pullback entries there are. 1, 2, and this was definitely a third when we broke here. So risk management. Look at something else here. News, positive news, continuation 14 hours ago. Float, low, exactly what I want. WNW. Now, I don't necessarily know it's a technologies company, so there you go. So that's almost all the criteria. Let's get my big ass head out of the way here. Look at the volume, guys. Like, the charts are telling you what's going on. Like, look at the volume. Smaller than the buy volume. And that's how we're getting micro pullbacks that are going higher, right? If any of these red candles were like this, like, you're not seeing the same chart. You're seeing shit like this where we break the EMA and gets just choppy and bad and not tradable, right? So look, entry, boom. You ride that up. You can sell half the position. You can add to the position depending on your scaling process and how experienced you are. Me, where I'm at today, I'm buying, adding, holding with a stop at break even, adding, selling, right? So if you were to buy here at the break like you should, like the strategy says, where is your stop loss? You should know this. It's the second we break the red candle. So if this was to push here and break down, boom, you cut that thing. That's risk management. There's plenty of opportunities. You don't need to stay holding a failing position. Micro pullback. See right there, we entered at new highs. Another example, we did it there and then we did it again up top. So basically, that is the PDF. So download it, use it, study it, print it out, take notes on it, download it to your computer. It doesn't matter what you do with it. Put it on your fridge at home. I don't care, but use it, okay? Because it's a free resource that you can improve from, okay? And that's what I'm here to do. I'm trying to give you guys value. I'm trying to teach you guys what I do to make money, my process, all the good stuff, okay? And journal. So get a journal. Practice in a simulator, journal your trades, and study. Take this PDF and study. Join my Discord community if you're new, and you stayed to the end of this much longer video than I was intending on making. I apologize. Join my Discord. It's also in the description. Like the video, subscribe. If you don't like the video, then don't subscribe. I don't care. But yeah, come download the PDF at least and give yourself a little bit of an edge above the rest. And catch you in the next one. Peace.